Welcome to another episode of the BlueFort Blueprint. Today we're doing another guest edition, and the guest we have with us is Neil Borate once again. He's the deputy editor at Mint, and he heads the personal finance team over there. Now, last time I'd mentioned that I'm a huge fan of his reporting, especially the infographics that Mint does is, in my opinion, phenomenal. Even Nirmala Sitharaman has gone to say that they've done a fantastic job. So, Neil, thanks a lot for your time. Welcome back. I think we had great fun last time, a superb conversation. A lot of people said, why don't you do another episode with him? And so here we are.
Thank you so much, Siddhant and Sayyam.
How have you been since we last met?
Oh, gosh. Hopefully not too much fatter. For a journalist...
You can't say that now, Neil. Things have changed in the last 1 year. You can't use that word.
Oh, okay.
I think you can say that about yourself, not about anyone else.
Yeah.
That's fine. That's
true.
good. So I think the first thing when we spoke about getting back and having a chat again, we wanted to talk about something that's it's called the pig butchering scam, right? And this is something you've done quite a bit of reporting on. And what's interesting, and I haven't told you this, but this is something that we've been a victim of as well, even at BlueFort Financial, right? Perhaps you can start by explaining what a pig butchering scam is, because a lot of people are still unsure, and it's not that only the small investor or the retail investor is falling prey to this. I'll give you some examples of some very large investors I know who have fallen prey to this scam. So please go ahead and whatever your research is, whatever it is that you can explain to our viewers, what this entire thing is about.
Yeah. So as the name suggests, it is basically a type of scam where it starts out with advertising on social media, Facebook ads, Instagram ads, and so on. People are enticed to join WhatsApp, Telegram groups. Then they are enticed to download fake apps that resemble actual broking apps. They're shown fake profits on those apps. They get greedy and they put more money. That's called the fattening of the pig.
Right.
And then when they go to withdraw money, they realize it's a scam, and then the pig is butchered.
Right.
It's a great name, by the way.
I think it's an international thing. It started long before it eventually came to India. But it's caught on here massively.
Yeah. So what happened, and this is, like I said earlier, this is something that happened with us. So one day we get a message randomly saying that is BlueFort Financial your company? Obviously it is. Say that you need to pay me. Can you please give me back my money? It was about 13,000 rupees, not too much. And we said, what the hell is this guy on about? It's an unknown number. We're not sure what's happening. Then he sends us a couple of screenshots, which says WeBlueFortFinancial.com, a website, and it resembles like an investing portal, right? Like, let's say like a Grow or a Zerodha or whatever, something like that, right? And he says, look, I've deposited this in your wallet, and that portal is also using our logo, right? And our website is called BlueFortFinancial.com, but the website that they had made was called WeBlueFortFinancial.com. So the resemblance was there, right? And they've used our logo and everything. They've even used our color scheme, right? So we were just completely shocked, saying, and before this I had not even heard of the pig butchering scam. Honestly, when I saw your infographic on LinkedIn explaining what it is, I was like, okay, thank God this is happening with other people as well, because if they're only targeting me or my company, that's very, very scary. And then we started getting messages from other people, and there was one lady who had lost 13 lakh rupees, right?
And this was an educated lady, someone working as a professional in a good company.
Yes.
So a lot of people with diverse backgrounds are falling prey to it.
Correct. Yeah, like I said, it's not just people who are from, I say, poorer backgrounds, or the average retail investor. Some very wealthy HNI investors are also falling prey to this, right? So people are depositing, basically people are creating websites impersonating us, and there are people investing here. It's crazy. Then what Viraj and I did was we went to the cyber cell in BKC.
The police cyber cell.
Correct, the police cyber cell, right? We went to the cyber cell in BKC, and because again at that point in time I didn't know what the scam was, right? So, and we were quite surprised and shaken up. So we went there, and the police does not give us a reaction at all. They're just smiling, right? And I'm like, what the hell is going on? Why the hell are you smiling? This is quite serious. He's like, boss, मैं अब बताता हूँ कि कितने लोगों के साथ ये हो रहा है, because obviously he understood the fact that we have no idea what's going on, right? He says कि आपको पता है angel broking पता है आपको? हाँ, of course पता है. बोलते किसी के साथ 7 करोड़ का स्कैम हुआ है एंजल में. 7 crores.
Yikes.
An HNI investor deposited 7 crores in and gave 7 crores to somebody who was posing as an angel broking employee.
Hmm.
Imagine that. At that point in time, I thought कि हाँ हम लोग का amount बहुत छोटा है. Forget it. We went happily back to the office and started working again. So that's the extent of this scam that is happening.
Yeah, it's massive. Every day you open the paper, and not even a financial paper, you open the Times of India,
Yeah.
and the crime pages has at least one story on somebody who's been butchered in this manner. And we really have to think about who is making the profits and who is enabling this. So obviously the scamsters are, and they will be caught hopefully. But right now nobody's talking about social media giants who are making so much money off of these ads, off of the websites that they're hosting. Why should they have total immunity? I don't understand.
And do you think it's one group of scamsters doing it, or you think there are multiple?
Oh, multiple. There'll be so many copycat.
Yeah, I'm sure there's a lot of different guys, and again, I'm not sure what the authorities can do or what they are doing to find these, because I'd imagine it's so difficult to track these guys physically, try and hunt them down and find them in which corner of the country. And by the way, the IP address of the impersonators, which we fell victim to, that was not even in India. Right, so how are we supposed to?
Hong Kong or Singapore, I think.
Yeah, it was Singapore or something like that. So there's nothing we can even do about this, right? But coming back to your point about why should the social media companies have immunity? Can you elaborate a little more about this? Because that's a little interesting.
In fact, before I get to that point, I had one thought on this, which is the IP address might be abroad, but the bank account has to be here, right?
Yeah,
Exactly.
correct.
So at least that can be frozen immediately, and whoever has opened that account can be caught or at least questioned.
Correct.
That person may be a mule, he may have no idea what the hell is happening, but
Yeah.
somewhere you can hopefully find some trace.
Yeah, but I'm sure these guys use like a web of bank accounts.
Possibly.
The moment the money hits the account, it's routed to another account, then another account.
Possibly.
So,
But even then, there's still a trail that can be followed,
for sure, yeah.
because eventually the money is going to the scamster himself, right?
Yeah. No, so once the police was amused by our faces, then they thought कि चलो बच्चों को थोड़ा बता देते हैं कि क्या कि what we will do about this. So later they told us that TK will shut the website down, and what we'll do is we'll freeze the bank account and all of that. So I'm sure they can do that. He said that actually getting to the guy would be quite difficult, and they're not sure how will they do that.
That's probably above their pay grade as anyway. It's because it's such a large network.
Yeah.
It has to be a central sort of focus to capture these guys. Because I'm sure they're in different states. I'm sure they're not people sitting in Bombay doing this.
See, we never got we never got an update anyway on what happened. So later, I think the number of messages of those scams did come down.
Yeah.
But yeah, going back to the social media companies, what was your perspective there?
Yeah. So far there have been no orders against them under the SEBI Act or any of the SEBI regulations. However, I don't think that they are immune or not governed by those acts, because those acts govern anyone who is purporting to be an investment advisor or a broker or any regulated entity under SEBI. So if they can extend to some guy in Indore who pretends to give advice and has a call center, it can equally well apply to Facebook, to Meta or Alphabet. This will require some amount of push from them, but I think it's high time this has to be done.
This is not just limited to the finance industry. A lot of other industries have also had complaints with the clout that these social media companies have had.
Yeah.
Whether it's your industry, for journalism, for example. If you remember, I think, was it in Australia that they sued Facebook? Or was it Google for simply collaborating various news from different media companies, and they said that you're providing free service for something that should be charged, right? So this is something, again, I think it's a very complex topic, and it's difficult for us to exactly draft those rules as to how they should be implemented, isn't it? It's a vast topic.
But I think it needs to be attempted. It's high time.
I think also, what do you think can be done in terms of educating people in general, educating the masses to avoid falling for a scam like that? Because end of the day, whatever you do, you try and clamp down on these, there will be other people trying and popping up.
Oh yes.
So some sort of responsibility does lie with the investor themselves, because end of the day, what these scamsters are doing is that they're playing on greed. right?
But if you go back to your example, right,
Yeah.
how would an ordinary investor know that BlueFort Financial is not the same as BlueFort Financial?
Correct.
And they're not actually dealing with maybe an aggregate, an affiliate website of yours, or
I think there's a couple of ways that people could know. One starts with education, like everything, right? Knowledge is everything. So, for example, identify the kind of businesses there are, right? So, who are we? We're wealth managers. Now, wealth managers can either be an RIA or they can be distributors. If somebody understands that, then I think again they could avoid the scam. Now, we as distributors, we never take funds into our account or a third party account ever, right? It's going straight into the product. For example, if I talk about mutual funds, the money of the investor is going from their account straight into the mutual funds account. So warning number one is, if somebody says, "Ki boss, you transfer this much
Correct.
money to my account or my wallet," so to
Yeah,
speak, that's warning number one,
Correct.
right? An educated investor would immediately know that there's something
red
wrong,
flag
right? So
number one.
red flag number one, correct. So that is there. Secondly, if whenever you make an investment in India, fortunately, because we're actually, it's unfortunate because we're actually very, very transparent in a highly regulated industry, right? Still people fall prey to this. When you make an investment, again, taking the example of a mutual fund, you get an AMC statement which confirms your investment, right?
Yeah.
You get if you're doing it, let's say with HDFC mutual fund or SBI mutual fund or Axis mutual fund, they will send you an email saying that, look, we've received your money and these are the units that you've bought
Yeah.
with us.
You get an
Alright,
SMS as
officially.
well saying that the units have been allotted.
Correct. You get an SMS as well. So that is number two. Number three is that the government sends you a monthly statement every single month, which says, it's called your NSDL and CDSL statement.
The KRA.
Which, exactly, which confirms that these are the investments you're holding linked to your PAN, whether that's your stocks, whether that's your mutual funds, even ULIPs for that matter, right?
Yeah.
So just some basic education on how the infrastructure of this industry works can prevent you from falling prey to these silly scams, right? Going to the brokers, for example, I just spoke about distributors, but again, now if I take the brokers example, like earlier I said angel broking ke saath bhi scam ho gaya, right? Again, when you transfer money, you don't transfer it to a wallet, you transfer it to a ledger, right? And that ledger should reflect your funds immediately. And when you buy securities from that, it should be reflected in the demat account. So you can ask for the demat holding statement. Again, the CDSL statement should give you this, right? You can even go to CDSL and depositories, right? And directly and ask them that, okay, is my securities lying with this or not? So there's several ways for you to ensure that you are not taken for a ride and your money is not going in the wrong way. Unfortunately, and I don't know whose responsibility is it to educate investors. Probably people like us, really. It's and that's the reason we're doing this. If we can create more content around this and it reaches even one person, or 10 people for that matter, then it would prevent them from.
I have an out of the box solution. Why not have a regulatory blue tick? Today we have a blue tick for people who identify themselves, do their KYC for the social media platforms, or who have a large following, but you can't tell if that person is registered or not with SEBI. So, I mean, that would, with an instant, solve so much of this problem.
But the problem is that the people the scamsters, they're imitating someone that is a registered advisor, distributor, and so on. So someone that was pretending to be us, if you go and Google BlueFort Financial or if you check the Amphi website, our name will show up.
Yeah.
So they'll think that, yeah, BlueFort Financial is legit. The question is, how do they know that the person reaching out to me is not from BlueFort Financial?
And the person reaching out always, by the way, happens to be a very beautiful lady. So that does not help either. I know Ankita was one of the names who were apparently part of BlueFort.
Ankita had a lot of surnames.
Ankita had a lot of Ankita Singh or something like that. And she was a pretty girl. And then there was this other one also, again, happened to be a pretty girl. So usually it's always, again, that probably red flag number 4.
Yeah.
If you see a pretty girl, then you should just be a little bit careful.
I think also it's the age-old phrase that if anything is too good to be true, then it probably is, right? It's not. If you put in money, say if you put in 1,000 rupees, and a day later they're saying that your balance is now 2,000, your money has doubled in a day. Nothing in the world can do that for you consistently, right? So you just realize that okay, there's something fishy going on here.
You can actually scam these scamsters, can't you? if you know that this is a scam,
Yeah,
deposit
just
the
go up
first-
until the first or the second level.
Just go up against the first or the second level and make a
Yeah.
quick. That's like a 3,000% return or whatever. Give them your first 1,000, make it 2,000.
I'm sure people do that. I'm sure people there would be some people that would have done that.
Yeah.
That would have done small amounts, but then never went into the big amount, and the scamsters made a loss there. But then one big fish is enough to for the scamsters to make up for all the losses they made in these few guys.
That's true.
If you guys think about it, with the kind of stuff that influencers put out, it is really hard to distinguish. They are so clickbaity ki where does the legit guy end and scamster start is...
There's
Yeah,
also
yeah.
another middle ground kind
Yeah.
of thing, like you mentioned, these call center people from Indore. They are trying to give you like these trading strategies and stuff. You get calls कि आपका नाम select हुआ है trading में हम help करेंगे and this and that, and they ask you to pay for something. How much of that is a scam? Because they are making you trade or they are giving you tips and stuff, but that then becomes sort of a grey line.
They are usually unregistered, or if they are registered as RIAs, they are in violation of various RIA norms.
And I think we spoke at length about this last time also.
Yeah.
There's a difference, because the principle that gets violated over here is freedom of speech, right? So you have to be very careful as to what norms you make. There's a difference between education and posting content purely for the sake of information, and there's recommendations
Yeah.
that you can make.
Yeah.
I would say that affiliate links, like we discussed last time, those are wrong.
Yeah.
I don't know about wrong, but probably not the best incentive structure, right? Let's put it that way. Secondly, if you are naming any securities or giving any sort of recommendations or insinuating that somebody should go and buy this, then again, that's probably, I don't know how regulations can draft it and what's the right wording to use this, but
Since the last time we did our podcast,
Yeah.
regulations have come out and updated for specifically for influencers and people who are linked to them. So I think they have gone in the right direction.
There's a draft proposal, yes, but not yet finalized.
Not yet finalized, but okay, at least something is being discussed.
Yeah.
Something hopefully is being done about it. I think like anything else, even with these scamsters, what they're doing is outright fraud, right? There are regulations saying that this is not allowed. It really comes down to how they execute on it.
There's an interesting variant of this scam now, which has lately surged, and that is the FedEx version, where you get a call from somebody purportedly at FedEx saying a parcel in your name has come, it has drugs, and the police want to call you, the police station, but right now you're under house arrest, so you have to stay in front of the computer and then talk to various investigating officers, and at some point after they have hassled you and broken down your mind, then they say that we'll settle it for X amount, and that's when the scam basically unfolds.
These guys are so creative. Imagine if they use this creative skill for something productive.
we should probably actually admit these people into RAW or something like that.
Channelize all this creativity into something profitable.
Just bring all the scamsters into one place and kuch acha kaam karo, and I'm sure there's something come up
We'll
with
get a
it.
Bharat Ratna for this.
Like I said, internet has thrown so many new challenges that we haven't thought. Now with artificial intelligence coming in and deep fakes coming in, right, where people are putting Modi's face on a statement, that he has not even said, or Amit Shah, or so many other politicians and celebrities. It's going to be nearly impossible to distinguish what's genuine and what's fake. So I don't know what the world is going to become like in the next 5-10 years. Let's see. It's going to be very interesting. One more interesting statistic that Sayyam and I were discussing is Indian household savings is now at an all-time low, right? Which is quite interesting, because India has been known in the world as the nation of savings, and this is culturally put, had always been put into us that aap 100 kama rahe ho to please at least save 30 or 40. It seems that has disappeared now, right? In fact, until 2 years ago, I think the savings rate compared to our GDP was around 11-12%. Now it's halved. Within 2 years, it's halved to 5%. Now there's two reasons, the way I see it, why this is happening. One is inflation. Prices have gone through the roof. And the other reason is consumerism, right? People want to live YOLO. I want to live my life. I want to enjoy. I don't care what's going to happen the next 10 years. So the Western consumerism culture is coming in. People are literally borrowing to live their lives today, which of course fuels the inflation, and it's like a never-ending cycle. While this is great for the economy, people are spending and buying, and businesses are doing well. But what do you think the impact would be of this? Is this a good thing, bad thing?
So in the long term, it's a very bad thing because that makes us more dependent upon foreign capital inflows.
Correct. Yeah.
And I think some of it is triggered by practices like the EMI offers that are thrown at everyone to an extent where in some cases EMI is actually cheaper than buying it upfront. I don't get the financial logic of it because somebody has to be bearing that loss, but it's massive.
The interesting nuance in these statistics is that the gross savings has actually not fallen that much. It's the net savings. And what the difference between gross and net is the borrowings. So the borrowings have gone up significantly. The segment that is growing the fastest is consumption loans. So that's basically buying consumer durables, buying cars, borrowing for your wedding, personal loans. This is the fastest growing segment because it goes back to that consumerism concept where people are wanting to have things that they cannot afford right now. Right? So they borrow it from the future. In the long term, that reduces our overall capital formation in the economy. While it might boost the spending and consumption sector right now, in the long term, it is bad for capital formation. So it has to be a balance.
No, and we're seeing these changes in our generation. I mean, Mumbai is supposed to be the land of like humble entrepreneurs, where everybody from the nation comes to. It's the Indian American dream, so to speak, right? Mumbai, that's the land. But now people are judged in Mumbai as well. This culture has come where what car are you driving, what clothes are you wearing, where are you getting married, what kind of jewelry are you wearing, and this is something we're seeing in our generation as well, right? People my age, early 30s. Are driving cars which are 60 lakhs, 80 lakhs. All of these are taken on EMI, which is fine. But even their gadgets and their clothes and with the buy now and pay later, almost everything is being put on a credit card or being pushed sort of into an EMI, which I believe is not generally from a wealth manager's perspective not a good way to live, because what you're doing is that you're only pushing for other people's validation. You're only pushing your financial freedom further away by 10 years, 15 years.
True.
And I really would urge all my clients and all my viewers to try and not do this. And it's hard, right? I mean, if you see Ambani spending 1,000 crores, at least you can spend 20 lakhs, right, on your wedding, or 50 lakhs. So I guess social media again is a big factor to blame, isn't it?
Again, it's very much driven by human emotion. FOMO is something that if you can deal with that and you can just be like, okay, what is really a need and what is really a want, then I think you'll be much better placed in terms of how you deal with your finances.
That's the thing. It's hard to define the need and want, because my wife thinks she needs a Chanel. So that's the problem, right? So how do you really distinguish? Which is why actually in our financial plans we always have a section where we distinguish the essential expenses from the discretionary expenses, where we force people to think, okay, what really is essential, right? What is discretionary? Because with the discretionary we can play around. Now that's where I can say, okay, you need to restrict. But sometimes people put stuff in essential, which is just not essential at all, right? So that definition has only changed.
My parents had that contradiction. So my mother was very careful with money.
Yeah.
My dad was a bit of a spendthrift.
Oh, okay.
So growing up, I was very confused. Are we middle class or are we upper middle class? Because if I go to my dad, he'll be like, "Acha, you want this toy? You want this book? Chalo, le lo, 1,000 rupees."
Yeah.
My mom would be like, "Are you crazy?"
Yeah.
So yeah, it's a very personality.
What did you end up becoming then?
Good question. At times a bit of both. There are certain things that I splurge on, but hopefully most things no.
What is the kind of things you splurge on? Now I'm interested.
Oh God, this is guilty pleasure time. Hotels. So
okay.
if I can spend, just one day in a nice hotel, I would do it.
Do you do this where you live sometimes? Just
staycation, right?
Okay.
So not so much in Pune, because Pune anyway doesn't have that much hospitality industry, but Mumbai sometimes, because I travel here to work anyway.
Correct. Yeah. Hotels. And what else? What's the next big purchase you're looking to make, which is you're like, okay, I'm looking forward to buying this?
Just the other day I was reading a news story on how Maldives has seen a big drop in Indian visitors, and I was thinking
the tourism, the foreign minister or someone, the tourism minister was saying that Indians, please come back.
Please
we
come
need
back. You. Yeah. So I was thinking, is it a little bit cheaper there? Should I just maybe
it's quite cheap. I checked the flights.
Is
it's
it?
much cheaper. Yeah.
But it's a little bit of a
Anti-national though if you go.
Yeah, you become anti-national.
अभी सब भूल गए अभी
सब भूल गए क्या?
नेक्स्ट इशू आ गया
Then that's good. अभी KYC वाला issue है, तो hopefully they're gonna forget.
As soon as another villain comes up, maybe it's
Correct.
Pakistan, maybe it's China, maybe it's someone else.
Yeah.
ठीक है. Maldives is not that bad.
We can all go back to Maldives. So yeah, we say that while it's not just save and defer all of your consumption, but there should be some sort of a balance. If you manage to pull yourself back and just not go with herd mentality, right? Stop this consumerism and just really distinguish the essential from discretionary expenses, right? And be a little a little bit frugal, a little more sane. You will find that after 10 years, you will be a lot wealthier than your peers, wouldn't you? Right?
I think a simple exercise, a very simple exercise of just budgeting. See how much you're actually spending, because a lot of times people spend on impulse. When you actually sit to calculate what you're spending on, how much you're spending, people realize, okay, maybe I'm overdoing it, or whatever. And that really helps. In that way, if you know how much you're spending, you can decide that, okay, this is how much I want to save. And then you can follow a save first, spend later kind of approach. If you're doing it completely haphazardly, a lot of people do tend to overspend just because of impulse.
And so for some people, it's circumstance. They can't, they're not able to save more than 20-30% of their income. But for others who stay at their parents' place, which as we culturally do as Indians, or who don't have to bear other kinds of expenses for food and fuel and stuff like that, there are guys who we know, a lot of guys in India whose salaries have increased, who are saving 70-80% of their income here. And in my calculation, if you just invest 70% of your income, within 10 years you'll be financially free. Within 10 years you'll be so much wealthier than your peers that then the car that you buy, then the clothes that you wear, not only will you be able to easily afford them, but they will outclass everybody you know, right? So that simple principle of being patient, right, and holding back your impulses and just thinking more logically will actually make you a much, I wouldn't say happier person, but probably more fulfilled person sort of 10-12 years down the line.
So same on the point of budgeting, it's become a lot easier now because account aggregator has come in.
Right.
So there are banks which have actually enabled this. Like one of my banks is IDFC First, and they've I had to click through and they enabled, so it aggregates all of my bank accounts in one place, and it makes the whole thing a lot easier. Because what happens over time is when we shift companies and stuff, we end up accumulating 4 or 5 bank accounts.
Correct.
Yes.
Keeping track is
That's actually very helpful, because a lot of people just simply don't do a budgeting exercise because of inertia, because it's too much work. Kaun karega ye sab? But the easier it becomes, obviously the more likely people are to do it.
One more thing we wanted to, I actually saw in one of your LinkedIn posts, again, one of your infographics, you've done quite a bit of work on credit cards, different kinds of credit cards. And while credit cards are being used a lot more than they used to, like we just discussed, there's a very smart way to use them, isn't there? Because there's different credit cards for different kinds of expenses, right? Yeah. And I'm a complete noob at this. Like I really don't understand, and I feel like I should probably increase my knowledge on this and which credit card I should use, or, how I should use them to best optimize my expenses. All I do is I use one, or I just use, my bank account and just keep making spends from there. What are the different kinds of credit cards that are available in the market now? According to you, what's the best way to think about this? How many credit cards one should have, right? And should they be maxing out the limit? Should they not be maxing out? All of these questions a lot of people have, and this is something even I would like to learn a little bit more about.
So there are different categories and different cards optimized for categories of spend, like travel cards, for example. But there are some generalized good cards,
right.
And those, work across the board, whatever you spend on. So Axis held that crown.
Magnus, I think.
Yeah, Magnus held that crown.
Yeah.
Then was very famously devalued. So now HDFC Infinia arguably holds it.
Right.
It's a premium card, so
yeah,
most people won't be able to get it. If I remember correctly, the income threshold was, I think, 30 lakhs or something.
Yeah, my wife has one. I for some reason the bank is not giving one to me. And I've been begging her to. The
lesson is save more and accumulate assets.
Accumulate assets. She probably has a bigger amount in her bank account, which is why she's able to get an Infinia, and I'm putting all my funds, in an SIP.
So despite that devaluation, some Axis cards still are compelling. We did a recent comparison of the new SBI travel card launch with a corresponding Axis card. I think it was Axis Atlas, and Axis again came out better. So what really blows my mind every time I think about this is that a bank is paying me to spend money, like literally paying me. The reward points are ultimately money.
Correct.
Yeah.
So long, the only condition is I have to pay my bill on time. And most people don't understand how credit card works or why you're getting this free money from banks as reward points. And the answer is quite simple, that the consumers who are not using credit cards are cross-subsidizing you. Guys who are paying by debit card and cash and stuff, they are cross-subsidizing all the
Or
credit.
the guys who are not paying on time.
That as well. So people are not paying on time, and people who are just, because the price is the same. I
Yeah.
go to buy whatever, a DO, price is going to be the same whether I pay in cash or card or debit. But
Correct.
here I'm getting a reward.
Yeah.
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 I was
So-
actually going to ask you, is are credit cards kind of like a mini pig butchering scam? Because one thing is, as you said, it's very dynamic, right? The reward points keep changing. They entice you with these fancy like joining offers and things that you get initially. You get a free ticket or whatever, and over time they just devalue it, which is what happened with Axis Magnus' example, but it's happened with many other cards as well. And then the idea is that they entice you to spend more and more, probably on things you may or may not need, so that they can sort of earn off of it, of the hope that you don't pay on time, convert it to EMI and so on.
There are actually two levels of enticement happening. Like you said, people who can't control themselves end up spending too much and get into debt traps, and they pay 40% odd interest on their
Yeah.
credit cards. And the second is the guys who are smart and accumulate reward points, and then suddenly the reward points are worth a lot less because the bank in question has devalued that card.
And most people, once they have the card, they don't switch around, and they'll just
Yeah.
keep spending on it. So then the bank has that customer,
Yeah.
even though they're not delivering on their original promise.
It works the same way with savings account as well. So if you think of some of these banks like Kotak and IDFC First who
Used to give 7%. Yeah.
then brought it down, totally it's a marketing strategy that sometimes pays off for those guys.
So credit cards is a good tool to use then. for sure.
Provided
If you use
people
them in the
pay
right
their-
way,
yeah,
you
they
should
will.
definitely be doing your spends using a credit card, because there's some school of thought which also says credit card hona hi nahi chahiye. You should only be spending from your savings bank account, which is not what we are advocating over here. We're saying
no, unless that person has a severe self-control issue, then
that right.
Yeah,
right,
I
right.
think I agree. It comes down to your personality.
Yeah.
Some people who just don't have impulse control. I know some people who are
Yeah.
just like, I don't want a credit card because I know that I'll go crazy with
Yeah.
it. If you are someone that has better control, then credit card or just debt in general also, borrowings can be a very good thing.
How many credit cards should you have? So you said there's a travel credit card.
Yeah. So it depends on how much of a nerd you want to be
Huh.
in this area. Like there's actually a community of credit card. They're called CC Geeks. They spend
okay.
hours discussing which card is best for which purchase.
What is this, like a WhatsApp group? Where
They
these?
used to hold a lot of spaces. I think now probably WhatsApp, I'm not quite sure. Yeah, those guys have 30, 40 cards and they know exactly which one to use where. But for most ordinary people, probably 2 or 3 is enough.
Is enough, yeah.
It'll be
Yeah.
impossible to keep track of these
I think
things.
it comes down to how much you can manage. Even if you have, say, 5 cards and you can use them in different ways. But for example, if you forget to pay the bill of even one of them on time,
Yeah.
then all your rewards are negated by the penalty
yeah.
that you're going to have to
Penalty,
pay,
yeah.
or the interest that you're going to have to pay.
Yeah. Like I put mine on auto debit. A lot of people have this fear of auto debit that, oh my God, the bank account is going to be cut. But you get a bill first and then
Yeah.
the money is debited.
Correct. You get a statement first.
Yeah.
Yeah. And should you be maxing out your limits? Because again, I've heard that if you if you max out your limits or go close to your limits, very often it's apparently bad for your credit score. I guess
You're
it's
right.
Not, is that correct?
It is bad, yeah.
Yeah. So ideally, stay well within or well within your.
I would say well within, yeah.
Okay. And if you are making those kind of spends, just ask your bank to increase your credit limit.
Correct.
It's as simple as
Correct.
that. Usually they easily do it. It's not a problem.
Banks are usually more than happy to increase
Oh,
your
yes.
credit limit
Oh, yes.
because they want you to spend more. They want to,
Correct.
again, entice you to spend more. And the hope is that you've spent more than you can pay, so that you convert some of it on EMI or you don't pay all of it. And then the bank starts earning interest from it. So most of the times your credit limit will be way higher than you will need it to be.
There was a recent RBI circular on some of these banking malpractices, right, with home loans. So, for example, what the banks would do is they would do a sanction letter on a particular day and actually disperse the loan later, but they charge interest from the day of the sanction letter.
to the dispersal.
In fact, we're doing a story on this, so a bit of a spoiler alert, but all kinds of shady stuff. Like in one instance, there was a buyer and a seller of a property.
Right.
And both had taken loans on the same property, and there was a period for which they were both being charged interest. And one guy had got the money, but the way they got the dates, they managed to charge both people interest on essentially the same loan on the same property at the same time. Other things that they do, for example, is they charge monthly interest even though halfway through you've paid back some money, you prepaid some money. So
Yeah.
it's bad.
And I'm sure people are not even checking the statements or checking
Yeah,
what's
yeah,
going
yeah.
on in the
Because
calculation.
often the amount is small and it passes.
And it's impossible to do the calculation for the layman. Like,
It's
how many
not, yeah,
people actually
it's-
know how to calculate an EMI, how much of it is interest, how much of it is principal?
Mm.
These are like things that you studied maybe 20 years ago in school, and it's impossible to do it now.
Yeah, you require an Excel sheet. You need to know your
Yeah.
way around a computer
Yeah.
and some serious math, right, to be able to understand this. It's quite interesting. I'm looking forward to your. Is it going to be another infographic? where
Oh,
you
yes.
explain
Oh,
this?
yes.
Yeah. That's pretty cool. All right, Neil. So we've been seeing quite a bit of changes, and the trend is changing in the style of fund management or the kind of fund management that the AMCs are doing. Not too far back, the mantra was always buy a good set of quality companies and just sort of hold them forever. And, the Warren Buffett philosophy where you can't go wrong, right? But it seems that in the last 1-2 years, new styles of fund management have been emerging in the Indian equity markets with the likes of Quant Mutual Fund,
Oh,
for
yes.
example, doing extremely well. Momentum funds doing really well, right? Smart beta funds coming in from various AMCs. And these are basically rule-based investors, right? It's not that they completely ignore the fundamentals, but they're happy to do, churn their portfolio a little bit more, work in accordance with what the current market thinking is or sentiment is, right? And perhaps the days of buy right, sit tight, is that gone? Is that something that you are seeing, changing as well?
Yeah, so it certainly seems to be gone for the fund house that brought in that slogan, which is Motilal Oswal Mutual Fund, because they have a new CEO in place. And one of the things that he is bringing about is more churn or acceptance of more churn.
Right.
Basically, the thought process is that if a particular stock is very down, let's say 20-25% down, that becomes a topic of conversation for all the investors. Like all the other 9 stocks or 20 stocks that are doing well, nobody talks about that. So they are willing to accept more churn, and both ways. Like if some stock is suddenly accelerated, become a big chunk of the portfolio, to trim that because you have new investors then coming in at a much higher level in that stock.
Correct.
Other fund houses may be also doing it in a more understated manner. But I would say there are still enough examples of AMCs that successfully stick to the old philosophy. And probably Parag Parikh is the best exponent of that.
Yes.
Ever since they were founded.
And they're still doing phenomenally.
Yeah.
That is true. And I think it's also a function of the current times and the market, right? Definitely in the last 1-2 years, the momentum or the churning has worked a lot better. Right, like I said, momentum strategy, smart beta strategy, where the funds per turnover ratio is slightly higher. They've done much better than the buy right, sit tight kind of. But that's also a function of the way markets have been, right? Is it a sign that buy right, sit tight doesn't hold true anymore? I don't think so. I think that there's always going to be a lot of value by an active fund manager who does their fundamental research, who understands the market, the companies that they're investing in, and just is patient, right? I think that is going to be evergreen. So, no, I don't think it's going to be irrelevant or redundant anymore.
Another trend sort of which fits into this is that funds are moving away from star fund managers. What used to happen is that these celebrity fund managers, they were rock stars, they were brilliant, and they would basically run the fund, and that's how it was, right?
Yeah.
A number of them have now moved out, started their own PMS or AIF, and as a result, a lot of funds have now moved to be a lot more process driven.
Yeah.
Where they still have a smart fund manager, obviously, but then they have safeguards in place that these are the rules that they have to operate within. How do you see that panning out? Do you think that's a good thing? Do you think that restricts them too much? Or do you agree that that's happening firstly?
Oh, yes, it absolutely is. So, in fact, going back to the Motilal example, they have also clipped the wings of their fund managers and said, you have to follow the themes that we've identified as an AMC, and you have some discretion outside that. Another example is Nippon, which earlier was dominated by star fund managers.
Yeah,
correct.
For example, Sunil Singhania.
Yeah.
Now, if you think of the fund managers, they are there, but not...
They don't have that rock star status.
I mean, they're still rock stars. It's just that it's become a lot more process oriented.
Yes,
maybe.
it's
And I'm sure that they've been instrumental in setting up those processes.
Yeah.
They themselves understand that this is something that needs to be done. So they would have spearheaded this entire, setting up the process so you can pick. So even if we are not there, the new fund manager can come in and seamlessly, fit in and manage the fund just as well, right?
Yeah.
I think it makes sense for them from a business perspective as well, because the number of AMCs has steadily increased over the year. Now it's about 45 or so. So for them, it's become a more competitive industry, and that just tells them that you have to be on top of things more. You can't take bets that will end up going wrong, which maybe a star fund manager would. So just bringing a lot more processes in place is good for them in terms of performance and their own business as well. And of course, that I think in general works better for investors also.
Yeah, I would say so. Because earlier the risk was if fund manager leaves, and they often did, they were poached, then
Yeah.
you'd be left high and dry.
Correct. Which does happen more often than people think. Fund managers get poached and they move all the time.
Yeah.
It's just that people are not tracking these changes. But we being in the industry, we know how
Yeah.
often it happens.
Yeah.
And then
So-
there are some extreme examples of, like, for example, smart beta funds, like you mentioned, which take the fund manager out of it entirely,
Mhm.
which are entirely rule based, and whether the fund house likes the company or not, it doesn't
Mhm.
matter.
Mhm.
A particular company may not be in their other actively managed funds, but in this fund, if the rule based fund says that it should be in the fund, then it will be. A lot more of those funds are coming up as well.
So a good case to include one or two of those funds into the portfolio now, because we are seeing that cycles, market cycles, business cycles are changing very quickly now. It's not that the bull and bear cycles come very off. We had the pandemic, we went to massive bear market, then quickly into a bull market. Wars are coming in. There's a lot of new information with the age of social media. Something happens, in the Middle East, we get sort of the info literally the next second, right? So cycles are definitely getting shorter. So there is a good case to include, and with artificial intelligence and tech, again, most of us don't understand how this will impact our life in the next 5 years, 10 years. We pretend like we understand, but how artificial intelligence will change our life, we're not sure, right? So which industries will be rendered useless, which new industries will come up, how jobs will change, how how volatile economies can be, right? That is something that we can't understand. There's just too many variables. So having some of these funds which can diversify your money, right, to protect yourself from these quick market cycles, I think is definitely a good idea.
So I differ a little bit from you on that, because even with smart beta funds, how do you know which fund to pick when? As in, when will momentum do well? When will value do well? I'm still sort of more on the lazy and pick one good flexi cap or two good flexi caps and be done with it.
Yeah, no, definitely. It's difficult to pick which smart beta, because who've got their parameters right is again something that's quite difficult to pick, right? But perhaps just for the sake of diversity, the only argument I would make is diversification, right? To have a different kind of strategy. While one strategy is already working, but just to have a different kind of strategy to cover your portfolio from all bases is what I would say. And at the end of the day, from our perspective, see, if I'm investing in a smart beta fund which churns very often, right, and it's a completely different perspective, but from my perspective, it's still buy right and sit tight, isn't it?
Yeah.
If you think about it, I'm still buying into a mutual fund and I'm not doing anything. There's no activity that I'm doing as an investor. And for most of us, that should be the case. We should even if I'm selecting, let's say, a quant fund or like a momentum fund, all I should be doing is I keep putting my money in, right, and just sit patiently. So it's really the professionals at the end of the active fund managers who have to do that call, whether we should hold the stock for 10 years, whether we should keep churning, whether we should use algorithmic trading, or whether we
Sure.
should use fundamental research. From our perspective, I think behavior wise nothing is really changing at all.
Sure.
A big mess that has come up, Neil, recently, and you reported on this again, is the KYC issues that a lot of mutual fund investors are facing. So all the questions of where we should invest, how we should invest, all of that is useless if you can't invest in the first place, right? You've done a really good video, which I'd sent to a lot of my clients, about what exactly is the problem with KYCs. But if you can do like a quick recap of that for our listeners, that would be quite helpful.
So SEBI came up with a new set of norms from 1st of April, which said that you have to, if you have Aadhaar based KYC, you're fine, you're KYC validated. But if you've done KYC through what are called OVDs, other than Aadhaar, so your driving license, passport, ration card, etc., then you are KYC registered, which is you can only invest in the funds that you've already invested in. You can put more money there, not fresh funds. And the third is the worst. So there's heaven, there's purgatory, and there's hell. Hell is KYC on hold, where your mobile number and your email address don't match
Correct.
the ones you've given to the fund house, and you can't do anything. You can't withdraw money. You can't put money.
Yeah, which you rightly said is hell. And what's happening with a lot of people is because their names on the Aadhaar and PAN don't match, for example.
So that's the next round where 30th April onwards that
It's
came
already
into-
come in.
It's come in. Yeah,
we're seeing that, all the details have to match. So even a detail as small as the PIN code, one digit is different,
Yeah.
right, on your address. Between the KYC details and the Aadhaar, they're rejecting the KYCs. They're coming on hold. Your mobile number, email ID is not matching.
Yeah.
They're putting it on hold. Your name is not matching, and
Even for a single letter. So if your middle name is Kumar, for example, and if you have K
Yeah.
on your PAN, but you have Kumar on your Aadhaar, then that doesn't match. It goes on hold.
Correct.
So you have to get that changed on your PAN.
Yeah, and for South Indians who have
Always.
extremely complicated names, like you had mentioned, for those guys, it's becoming a nightmare. And we're seeing this with a lot of our clients. Right? Their transactions are stuck. They're asking us why we're not able to invest. We just don't have an answer to give. And some KYCs are getting validated like this within 2 days with some random link. Every now and then a new link comes to us that abhi ye use karo to validate ho jayega, abhi ye use karo to validate ho jayega. Kuch ho rahe hain. Some KYCs it's taking months, right? It's been more than a month and we're just still not able to validate it. And the problem is, what the frustrating thing, Neil, is that there's no standard process. So every KYC is like a new challenge. We're still figuring out what is the right process. If I knew the process to this, I would not be so troubled. But it seems that there's no fix. Okay, step 1, step 2, step 3, step 4. It's all different links and different information, and every day something new comes and everyone has a new idea. Like my staff also, somebody comes into my cabin, Siddhant, I think this is what we can do. Somebody else comes, Siddhant, I think this is what we can do. And I'm just like, Jo karna hai karo yaar. At this point in time, I'm telling my clients ki boss, just wait now. Don't trouble me. I'll tell you when the KYC is done. So that's the kind of mess that we are in right now.
Somebody had tweeted, no, he did KYC some 14 times in his life. तो अभी PhD कर चुका है KYC में. So you guys are also on the way to PhD status.
Yeah. That's
it keeps changing. No, the rules keep changing. This KRA has this link, then it changes to this, then the process is there. Then you need like an Aadhaar QR code or something other, and it's just like, what is happening? Some people is just stuck for so long, and there's just no answer. Even if everything is in place, the names are matching, we've given all the documents, it's just not happening because of the overload in the industry.
Yeah, that's also frustrating. Just the overload in the industry. Sometimes where everything is right, but the fact that the papers haven't reached Chennai on time, where the CAM's office is. Bas KYC reject ho gaya. For some clients, we've given it like 3-4 times also.
And especially for NRIs, I mean, it's like India saying to NRIs, we don't want your money.
Yeah,
because
it is
so hard. Like they don't have Aadhaar, a lot of them, and
correct.
They're stuck with the funds that they already have. That too, a few of them only. Most AMCs don't even allow a lot of US, Canada NRIs to invest.
Yeah, it's crazy. At least they should have made an exception for like non-individuals, KYC registered, they can still invest, right? But they should have made an exception to NRIs. Yeah, what are we trying to say to people who live abroad? Are we saying that your money is not welcome over here? In something as simple and so widely spread as mutual funds. I mean, mutual funds is supposed to be that one product or that one guy who accepts all, welcomes all with open arms, right? And if PMS and AIFs are complicated as it is, so if you're telling an NRI you can't invest in mutual fund, then how are they supposed to invest into India? Then the whole ease of India mein business karo, invest karo, ease of doing business in India
goes for a toss.
It goes for a toss, right? It's not a good message to give to NRIs at all. And again, in our people are getting frustrated. People have said, you know what, India is too complex. Because one more thing, Neil, is that a lot of NRIs who've lived abroad for 30 years, they don't have a great view of India, right? Because 30 years ago, India was quite back. It was a very, very different country. Our banking was different. Our IT and tech was different and all of that. But that changed, right? India has become absolutely amazing.
Yeah.
But with this KYC thing, now the same message is being given to the NRIs that India is just as it was. Right? So these guys are like, India's not changed. And all this while we've been going and telling them that India has become much better than your country.
Yeah.
So it's quite a shame, really.
Yeah, the only light at the end of the tunnel is that there could be feeder funds coming out of Gift City. There are already AIFs that AMC got permission to launch, which feed into specific mutual fund schemes in India. My hope is that eventually retail feeder funds will come out, and then it's a lot easier there. The KYC out there is.
It's a very long process. So that's going to happen over a very long time.
My feeling is probably within a year we'll see the first few retail fund launches.
So when you say feeder funds, basically the funds will feed into local Indian mutual funds over here.
Yeah. So I'll give
Yeah.
you the example of HDFC AMC,
Yeah.
which got approval for 6 specific AIFs feeding into specific. So HDFC BAF, for example, specific schemes. So you can choose just like you can choose.
Correct. But these are AIFs for now.
They are AIFs for now.
Yeah. It would be really nice to have feeder mutual funds launched in Gift City, like you said, so that smaller ticket sizes can also come in.
Correct.
And they can feed into Indian funds. And again, KYC is much easier, like you said, no tax, right? Which is going to be immensely beneficial.
Do you know if the regulations allow that to have Gift City domiciled mutual funds schemes?
Yeah. They're on. That's what I'm saying. Within a year, I think they'll get launched. Already, I've heard from sources that it's quite fast. It's happening.
Right.
So what's interesting about this whole thing, what the government has done subtly, is that they've moved from the PAN being the universal identification document to the Aadhaar.
Oh yes.
So everything to do with money, PAN was involved, right? Up until like 2 years ago. And now Aadhaar has to be linked to everything.
Correct.
So PAN, I think, is heading towards
Oblivion.
almost becoming redundant.
Something that people need to understand, that they're watching you. that one number is going to give them all the information that you need. All your financial assets, your physical assets. It's basically like the US social security number, isn't it? Where all they have to put in is your Aadhaar, and they find out everything you own and do and think, and everything is linked to your Aadhaar. So while a lot of countries have that, and it's probably a good thing generally for the country.
It actually in the long term. So like in Singapore, for example, my friend was telling me, you just need to give whatever their ID number is, and all your information comes to any approved entity, what your loan is, what your income is, and things like that. So then it makes everything, getting a loan much easier, investing it makes much easier. So the ease of doing business in the long run will improve. So I think the direction is right. It's just a question of whether they could have implemented it correctly.
It's scary. I mean, in a totalitarian state, this can be misused massively.
Correct.
Yeah.
But in a democracy, with there's enough checks and balances, it should be fine. Probably the only change that I've made in my portfolio this year is that I invested in Hang Seng Bees, the Nippon feeder fund.
Right.
And also in the Edelweiss Greater China Fund. Because I think there's probably a good contrarian bet right now, the Chinese stock market. So what do you guys think? You have obviously a much better perspective having grown up in Hong Kong.
Yeah, so a lot of reports, a lot of information coming out on this recently. What's happening is that there's a huge valuation arbitrage between the Indian markets and Chinese markets. Objectively speaking, Chinese markets are a lot cheaper than the Indian markets right now, right? There are a few reasons. The reasons are that Chinese markets, there's some political uncertainty. There's the real estate bubble where we've seen players like Evergrande and Country Garden, go bankrupt. People are not sure what the government is thinking. There's no depth in the local equity markets over there, really, so to speak. A lot of these companies are listed in Hong Kong or the US, right? US is not happy with a lot of their tech companies, and there's all these sanctions. So for many reasons, the Chinese market is very undervalued. Now, and there's good reasons why it's undervalued, right? But at an investor's journey, there always comes a point in time where you say that, okay, is it too cheap now? Is it a point? I know it's probably not a good buy, but yaar, bahut hi sasta hai yaar. Should I buy it? Which is probably the reason why you bought it, right? So that's where China is now, where everybody's like, yeah, it's too cheap, yeah. What can possibly go wrong from here, right? So people are investing into China again. From a short-term perspective, if you ask me, I think it's probably a good bet. I think if you want to diversify your portfolio, definitely we can, you can put like a small SIP or, staggered lump sum kind of thing into the China market. But from a long-term perspective, there's a lot more that I think Sayyam, it's probably a better, because you have done some research into China. You used to, when you were in equity research, you have worked extensively in China. So you would know from a long-term perspective, should one just buy and hold into China right now?
China, I don't think, is a long-term buy and hold place anymore in the current circumstance. There could be a short-term kind of bounce where you'll make some money. While I agree with most of the things Siddhant said, I'm a bit more skeptical. If you're putting in a small amount, you're going to make a small amount. Is it really worth it then? And that is provided that you're going to have to exit at the right time. There have been multiple cycles in the past 2 years where the China market has bounced back a little bit. And it's looked like, a lot of my friends in Hong Kong are like, okay, every time this is it. Now Alibaba is going to take off again, or Tencent is going to take off, and it's going to drive the market. And that's simply not happened. It's gone up and then come back down. It's in the short term, yes, you can make some money. There might be a period of 6 months, a year, where China actually outperforms India. But assuming you get the timing right, that is when you'll make the money. And it's very difficult because the timing in China, the fundamentals are driven very much by one single man. Right? Xi Jinping, whatever he decides, whatever he gets into his head, and that's going to happen in China, right? Whether they give the stimulus or not, how they treat their internet companies, things like that. And that's practically impossible to predict. So I would say if you are entering into it for that opportunity, don't be too greedy. If you've made some money, if you get like a 20-30% kind of jump, start booking your profits, because you never know when it could fall back down. In the long term, China has major fundamental issues. It's, I think, where Japan was 30 years ago, before Japan entered the lost decades, where the population is aging, the consumption is slowing down. Their one-child policy has really wreaked havoc on how society should progress, because now they have two dependents on one person in the workforce. They've increased that to now a 3-child policy. They're trying to get people to have more babies. Firstly, that's not working. Secondly, even if that does work, those kids will enter the workforce after 20 years. So what happens in that time? So China is huge. Volume, like we were talking about, is massive. Technologically very advanced. They've done phenomenally well to get where they are over here. But as an investor, what you look for is growth. Will that happen in China? I'm not really sure over the long term.
Yeah, and that's the important point. You have to think from an investor's point of view, right? Because like you said, China may be state of the art when it comes to AI. It's probably 50 years ahead of India, right? Let's be honest. China is absolutely phenomenal. When it comes to manufacturing, again, probably miles ahead of India. But from an investor's point of view, is it worth risking your capital to over the next 3 to 5 years? We personally don't think so, because whether it's a company or a country, when transparency or corporate governance becomes an issue, and you don't know if the information coming out of there is genuine or not, should probably stay away as an investor, right? So short term, yes. Long term, probably still not.
So I'll give you one quick example. What they're saying, the target for their GDP growth this year is 5%. And apparently they're on track to achieve that. Speak to anyone doing business in China, they'll tell you that's not true. So the numbers that are coming out of there, it's you can't really rely on that. To what extent, I'm not sure. But anyone I've spoken to that has a business in China, they're definitely not growing at 5%. Their businesses have fallen off massively.
Yeah, so you've started investing, Neil. Be careful. Let us know how it pans out.
Yes.
Right. So thanks guys for listening. We spoke about quite a few topics today. We hope you enjoyed it. Please do like the video, share and subscribe so that Neil can actually come back. He needs viewership, right? So thanks a lot for your time.